Turmoil ensues in the global financial scene with rampant inflation, amplified recession fears, and wide-reaching geopolitical risks have investors scrambled to reassess the future prospects of the shiny metal. Not only that, but the declaration of monkeypox as a global health emergency from World Health Organization steered the waters even more and raised the inevitable question of how governments might respond towards this new threat and what implication will it have on the grander scheme of things. Having said that, in this report we aim to shed light on the current and upcoming events that are of crucial importance of the future development of the precious, as well as a technical analysis of assessing its potential short to medium horizon. Gold's price has been confined in a sideways price action for the past few sessions, slightly above the 1,700 range, possibly showcasing an absence of conviction on where it might lead to next. Traders brace themselves for tomorrow's scheduled Fed's interest rate hike decision and the follow-up speech by Chairman Jerome Powell, awaiting in anticipation on whether the hike will meet the 75 basis point consensus or will there be an upshot surprise of the 100 basis points hike. Should the rate match the expectation, we might see a rather small yet supporting reaction towards the greenback, as the decision is already mostly priced in and could in turn weigh slightly on the precious. However, should the Fed opt for an even more aggressive hike and take the market by surprise, then we might see the dollar get a substantial boost and as consequences observe the precious retract, becoming more expensive and thus unattractive for international investors. The aggressive rate hike stance by the Fed comes after the 4-decade high of the consumer price index rate released in June, exacerbating fears that inflation will take a toll on the consumer front and become entrenched in the economy for longer. On the flip side, should the Fed opt in for the more aggressive monetary policy tightening option in the following months, we might also see the probability of the US economy entering a recession increase to 40%. According to Reuters, thus the chances for a soft landing dwindled drastically in our opinion. Another factor that might impact the shiny metal's future outlook are the bond yields. Even though gold is considered a safe haven and hedged against inflation, it could fall out of favor when contrasted with the US Treasuries, as the pressure bears no yields. Bond yields, however, and the US 10-year in particular, has been declining for the past few sessions, which could provide support for gold, making it a viable option for investors' portfolios, thus increasing the demand for bullion. Finally, we also note the upcoming financial releases for the US, namely the GDP rate figure for Q2 to be released on Thursday, the 28th of July, alongside with the initial jobless claims figure for last week, and on Friday, the 29th of July, the consumption rate for June, and the University of Michigan's final market sentiment report for July, all being of material importance for the dollar and as consequence for gold's price.